The warning signs across the global economy are getting harder and harder to ignore nowadays. America's debt problem is getting out of control. Public debt has now surged above GDP levels not seen since the aftermath of World War II. This current setup has become extremely dangerous. On the surface, everything looks very strong. The S&P 500 continues pushing towards new all-time high. AI stocks keep flying. And markets are acting like there is nothing wrong. But underneath all of that optimism, the cracks are really starting to show right now. If you're new here, I'm Sarah, a crypto investor that has been in the markets for years. And here on this channel, I break down the crypto trends, different narratives and tips, and I show you how I navigate the crypto space step by step. Today in this video, I will tell you exactly what to expect from crypto in 2026, potentially 2027, and I will give you the secret to success. So, let's move on. Consumer confidence is weakening right now. Inflation pressure remains unresolved. Recession fears still exist, they're still on the table. And the disconnect between Wall Street euphoria and Main Street reality is becoming impossible to ignore at this stage. And in fact, we may be entering one of the most dangerous phases of the market cycle, the late stage bubble phase where everyone feels invincible right before volatility returns. If you look at this altcoin roadmap, this is the last stage we are entering. It might not feel like this, but I can tell you we are there. How I know this? We managed to make on Discord more than 10x just in a month from small market cap projects. So even after a major legislation which we just had moving forward in Washington, the Clarity Act, Bitcoin still struggled to maintain this momentum. That tells you something important. This market is no longer, like trading purely on crypto narratives alone. It's now heavily reacting to macroeconomics, liquidity conditions, government debt concerns, inflation, and uncertainty surrounding the global economy. It's not just there floating on its own. At the same time, you've got AI, which has completely captured investors' attention. Money that once flowed aggressively into crypto is now flowing in AI, data centers, defense, infrastructure, and energy plays, not as much as in crypto. And while retail excitement around crypto has, cooled down significantly over this last year, institutional interest behind the scenes continues growing rapidly, especially around stable coins, crypto infrastructure, and digital payment rails. This is why the current battle over crypto legislation in Washington matters so much. Behind closed doors, banks and crypto companies are fighting over the future of finance itself. Stablecoins, yield, regulations, banking power, all of this is becoming one of the biggest financial battles happening right now in real time. But the bigger picture here goes beyond Bitcoin and altcoins. This is really about trust in the traditional financial system. When debt keeps rising, when governments continue spending aggressively, when inflation remains persistent, and when politicians struggle to make hard decisions, investors naturally begin, searching for alternative stores of value. That's where Bitcoin continues entering the conversation. But I can tell you for sure that crypto investors massively underperformed compared to AI, compared to tech innovations. These investors that were focusing on AI and tech outperformed the crypto investors recently. But despite this disappointing short-term price action, the long-term thesis surrounding digital assets has not disappeared yet. In fact, the instability that we see today may actually be strengthening the case for decentralized systems over time. And this is where things get really interesting. The recent pumps, the all-time high in stocks, these things are pulling back retail investors. So the markets are acting very calm while macro risks continue building underneath the surface. This is something that I can tell you is happening. Now, I personally think that this actually creates a very important environment for investors moving forward, because periods of maximum uncertainty, maximum pain are often where the biggest long-term opportunities are forming. So the balloon popping might not be today, might not be tomorrow, because I'll tell you something else here. Yes, everything is so overvalued, but at the same time, what I'm going to tell you next is very important. Everyone keeps saying that high interest rates are going to destroy the economy, crash the markets, kill crypto. But you have to understand something. The people running the treasury are not clueless politicians. They are not clueless. They understand macro, they understand liquidity, they understand debt, they understand bonds. They know exactly how the financial system works. They know the stakes. And more importantly, they know the dials they can turn. And this year we have the midterms. No administration wants market collapsing going into midterms. Think about it, it's very logical. They will do everything possible to avoid economic pain if they can. That means liquidity injections, support programs, easier financial conditions, stimulus behind the scenes, whatever it takes to keep the system running, to keep the system stable. And as you know, every time liquidity starts flowing in, riskier assets benefit from that. They respond. Stocks move, crypto move, Bitcoin moves. So while everyone is screaming collapse, smart money is watching one thing, and that's liquidity. Because in this system, by the way, they can delay the pain as much as they want, longer than we all think is possible. They can keep delaying it, and that delay might be until 2027, which is the most logical approach. So based on these probabilities and what I just told you, here is the most practical framework that I believe every investor should follow to navigate these macro conditions. Number one is lock in gains without exiting the game completely. If you're sitting on gains, don't treat it as binary. Taking 40-50% off the table on strong performers helps you survive volatility while still staying exposed. The goal here isn't, to call the top or to call the bottom. It's to reduce emotional pressure and secure capital so you can redeploy it later when opportunities reset and you see bigger opportunities coming on the horizon. So that's number one. Number two is anchor your portfolio around Bitcoin as your core hedge. In uncertain macro conditions, everything that I talked about earlier, Bitcoin acts as the highest conviction base layer asset in crypto. It's not about chasing, maximum upside here. It's about positioning around the most resilient magnet in the space. If capital rotates out of risk, Bitcoin is usually, the last man standing before it rotates back in. So definitely everyone in crypto should own some Bitcoin. Number three of the framework, actively build dry powder instead of staying fully deployed. A strong investor mindset is always part in, part ready. That means intentionally keeping capital on the side instead of being fully allocated. This gives you a lot of flexibility when we have sharp corrections because those happen in crypto. And because in crypto, the best entries usually come when the most people are forced out, not when they feel comfortable buying. When everybody feels forced out, this is your best time to deploy your capital. Now, number four of my framework is avoid all-in positions. Learn how to scale in and scale out systematically. No single entry or exit should determine your outcome in crypto. Build rules. Scale into positions over time. Scale out on strength rather than emotions. This removes a lot of guesswork and protects you from volatility traps when markets move 20-40% in either direction faster than sentiment can adjust. Because yes, corrections happen faster than the sentiment can show you this. And now number five, this is the last one but very important one. Narrow your focus to a small, high conviction altcoins watch list. Instead of spreading attention across thousands of tokens, pick 3 to 5 altcoins you actually understand deeply. Their fundamentals, the narrative, the liquidity, the tokenomics, the catalysts that are coming on the way. Because conviction in fact comes from understanding, not quantity. The edge comes from knowing why you hold something, why you've invested into something, not just holding it and hoping that it runs higher. You need to understand. So choose 3, 5 altcoins, study them, and keep your conviction. Build your conviction and keep DCAing and investing into those. Don't look left, right, up, down all the time chasing the next shiny thing. Study and focus. Because the investors who win in the next cycle, in the next 3 to 5 years, are not the people that blindly chase hype at the top. It will be the people who understand the macro picture early, position themselves correctly, manage their risk properly, and focus on long-term asymmetric opportunity before the crowd catches on. Whether this is going to be Bitcoin, whether Solana, whether another layer 1 or AI or digital infrastructure or something else entirely, the world is clearly changing very quickly and you need to keep up to speed with all these changes, what is happening. As I said, study and focus. And right now we have the opportunity to watch the financial system completely reshape and change in real time in front of our eyes. So we always need to make sure we understand what is happening and position ourselves accordingly. I hope you found this video helpful. If you did, please don't forget to like, subscribe, and share. Thanks for watching. I'll see you in the next video.